we're going to answer the question, the most frequent question that we've been getting asked in 2024. When will houses get less expensive in 2024? Now, the question usually comes in like two different flavors. Flavor number one is, when will home prices drop? Will home prices drop after the election? Or flavor number two, when will interest rates come back down? Well, today we're going to talk about both. When will home prices drop? They won't. That simple, full stop. It's very unlikely that they will. Watch some of our other videos. The reality is the conditions are not there in the market. 2008 was the first time that we've seen that kind of a home price drop. It's very unlikely that it will happen again. That being said, if you just pay attention to seasonality every year from January to June, home prices go up, and from June to January, they go back down. Now, the key is almost every year, home prices go up more in January to June than they go down in June to January. Even if you go back and you look at the 2008 recession, when home prices dropped by 20 to 30 to 40% in some parts of the country, generally, home prices still went up from January to June. The difference was they just went down more from June to January than they came back up in the next January to June. It's wild. Go look back at the data. The data will always set you free, and that's the reality of the market. So if you're looking for the best time to buy, hey, it's May. Home prices will continue to rise for the next month or 2 months. As the kids go back to school and the market starts to slow down, the days start getting shorter as we come into the back half of the year. Guess what? Home prices typically tend to soften. Inventory will continue to build until we get into the holidays, and there's usually some deals to be had in October, November, December. Now, all that being said, that could change if interest rates change. What you've seen in the last 2 years, so go back to September 2022, we saw the single biggest 30-day uptick in interest rates in recorded history. We went from sub 6% rates to 7% to 8%. It was wild. We saw rates move faster and harder than we've ever seen them move. It put the brakes on the housing industry in a way that I've never seen in 24 years of doing this. I don't expect that to happen again either. Now, what's interesting is if there was ever a time that the housing market should have crashed, it was then. It was September, October, November of 2022. It didn't crash. That's because there's a massive housing shortage. There are not enough homes available. There are more buyers than there are homes on the market. In fact, even today, May of 2024, there are just over 1 million homes for sale in the United States. Well, folks, on any given year, we typically sell between 4.5 to 5.5 million homes. If there's only 1 million homes for sale, that means there's only like 3 to 4 months of inventory. Go back to 2008, 9, 10. What drove the housing crash? There was 10, 15, in some markets, 20 months of housing inventory. It's simple supply and demand, and those economics are not in your favor if you're waiting for home prices to correct. However, here's the shot. Here's the upside. Interest rates should come down. Here's why I say they should come down. Look at today. Today, the 10-year treasury is hovering right around 4.5%. Now, if we were in normal times, we would look at the spread between the 10-year treasury yield and the average 30-year mortgage rate. And that number is usually about 1.5%. So if the average 10-year treasury yield is 4.5%, the average 30-year mortgage rate is usually going to be about 6%. Well, then why is it 7.25% in May of 2024 when treasuries are 4.5%? Why is the 30-year 7.25%? Well, the answer is the spread. That spread between the 10-year treasury and the 30-year mortgage rate is really an indicator of the investment appetite in mortgage-backed securities. And so when there is fear, when things are very inflationary, when the economy is running hot, mortgage-backed securities are not the most effective or attractive place to put your money, which means investors want a bigger yield to have their money in that part of the market. Now, when the labor market starts to soften, the Fed starts to cut interest rates, and it seems as though the economy is starting to slow down, that money moves back into those mortgage-backed securities contracts, and the spread comes down. So folks, if you wait for the Fed to start cutting interest rates and you say, there's my sign, that's it, I want to go buy, you are likely too late. You have missed the opportunity, because here's what happens. Today, supply is slowly going up and demand is kind of flat. The reason for that is affordability, right? Prices continue to go up year over year and interest rates remain high. Now, the good news, wages are growing, which also helps keep affordability intact. That's why you haven't seen the market really stumble. As that changes, as interest rates come down, keep in mind, if those interest rates go down from 7.25% to 6.25%, that is the same as the house changing price by 10%. So if you're looking at the average house in the US today, it's almost $400,000. That's a $40,000 swing to the affordable price of that home with a 1% change in rates. So even if the Fed doesn't change interest rates, if the conditions in the market simply change and the mortgage-backed security traders get a little bit more aggressive, you should see those rates move to from 7.25% to 6.25%. That is the same as you getting 10% more buying power for the same monthly payment. Now, here's the deal. The minute that happens, millions of you, hundreds of thousands of you, maybe those that are watching this video will say, this is what I've been waiting for. Finally, rates are in my favor. And the house today that is getting 3, 4, and 5 offers will go back to getting 30, 40, 50 offers. And you will then again see double-digit home price appreciation. The opportunity is now, folks, because if you wait for interest rates to come down, which they will eventually, you will likely have missed the opportunity. So what the smart money is doing today is they're finding a good deal in this market in a house that they want to be in, that they can see themselves living in for a long time. And they know that they will take that opportunity to refinance that house in the future to get to a lower rate. Now, bonus, if you're a veteran, if you're a VA home buyer, if you're a first-time buyer looking at an FHA loan, or you're looking at a property that previously had an FHA loan or previously had a VA loan, we are seeing some loan assumptions happen. Talk to your real estate agent. Ask, does this home have an assumable loan? Have that agent go work with their local title representative, pull a list of homes that potentially have assumable mortgages. Just about every veteran's loan and every FHA loan is assumable. That means if that person has a 2.5% interest loan, you can actually take over their payments. You can assume their loan and you can keep their interest rate. Now the gotcha is a lot of those people bought their house 2 and 3 years ago. That house is appreciated by $100,000, $200,000, $300,000. That money has to come from you in cash, or you have to be able to get a purchase money second mortgage to sit behind that existing first money mortgage. There's not a lot of that money out there, but for those of you that you've got cash and you can make up the difference, we're actually doing a deal right now, right here in Tucson, Arizona. It's a VA deal. The buyer's buying the house, they're assuming the loan. The loan interest rate is 2.875%, May of 2024. That's an amazing deal for the buyer. The seller was able to get a little bit of a price premium for it, and it's a great thing. So all the way back to the initial question, when will mortgage interest rates change in 2024? Well, the answer is nobody knows. However, I would suggest to you that between now, May, and the end of summer, it will become clear that the labor market is softening. As the labor market softens, I would expect that you'll see those mortgage prices start to move down closer to the 10-year. As that happens, that's your sign. That's your sign that there's a window of opportunity opening. The window's already a little bit open. I would encourage you to step through it. So contact us, contact an agent. We'd be happy to refer you. We know agents all over the country. Like, subscribe, and we'll keep the content coming.